can be a really, really nice tool to have in the tool belt right now.
Yeah, I appreciate that.
Hey, what's up, everybody? Good morning. Let's get ready to roll. All right. Market starting slightly lower in futures. Nothing too crazy. VIX still in decay. We're trading inside DD bands. Market's stable. Looking for a flat-ish week. I think in general, slow bull drift up is the still sentiment I see in monthly maps. And again, nothing too crazy. Not too violently to the upside. Not too violently to the downside. I think directional plays are going to be punished pretty heavily. Rolling into this expiration, I think the market's going to we're going to have to find small opportunities, take what we can get. And, it is what it is. So good morning, friends. Hit that like button while you can. Let's go, let's go, let's go. Hit that like button, everybody. Let's go.
Hello from the children of planet Earth.
Yo, let's go. To go quickly inside of DD bands, market's pretty good. VIX and decay. It's a quick market check. Let's go. Platform front and center. Get our data coming through. Let's get those liquidity maps and all in. Oh, my bad. My mic was turned down. All right. Let me try something real quick. Let me. All right, we get the barrel long up, possible hedge pressure breaks. VIX is actually opening. Okay, VIX is good, so clean on that. In DD bands, hedge pressure long, probably to upside. Let's see what resilience is showing really quick. Resilience is process. Let me add that to you. Hold on 1 second. Let's add resilience on there. All right. Oh, let me add resilience indicator to here really quick. All right, there. I'm just organizing my layout. God, I love this new layout. It's so nice. Those subcharts aren't populating data. Okay, so looking at today, bear short up. Clearly, hedge pressure break. Got to be careful on that. Let me put the alerts on here. What's up, friends? I don't know if that's just me. Does anybody else's alerts look like that really quick? Just double checking. Oh, there they are. They popped. They just now popped up. Okay. That's on his way. Okay. Turn some music on. There we go. That's better. Let's see what Nasdaq's looking at. So not anything. Today is just a day. Again, long 8 hedge pressure would be a long setup, and that's the only thing I would do if we have a bear long up scenario. Long 8 hedge pressure if resilience goes positive, and resilience is slightly going positive and now, but it's not really holding that fort. Again, today, let the market just kind of drift back a little bit. I know these days are not the most sexiest in the world. Now, again, we have a news event coming out this morning. We have the market data. Let me just do this really quick. We have services PMI and ISM non-manufacturing coming out in 25 minutes. So we're going to let the market, we're going to let that kind of drive things. So right now I'm just going to sit down and wait for that to happen. It's going to look at DD bands. I'm loving it, man. Every day we're putting out, we had a new patch this morning, so platform should be smoother, quicker. Candles should be smoother and quicker. Beige book is today as well. Oh yeah, that's correct. That comes out at 1 o'clock today. Can you guys hear me? We back? We back? Yeah, this is just kind of a meh market. Let me chime in really quick on the space. So nothing really. I'm going to wait. Let me show you what I want to do. I might set this one out again too. Again, yesterday, remember, yesterday, flat, choppy day. Let's kind of talk about yesterday, right? This is what I love about the platform. I can avoid so much junk and noise just by not doing anything. And remember yesterday, right out the door, I just said I wasn't going to do anything. And this is the S&P. Went absolutely nowhere. Basically, just kind of looking at, you remember yesterday, you know, the rocket scooter signal just kind of came out and choppy. There was little limited upside, limited downside. So right out the door, I just chose to sit out. You know, I said, today's going to be choppy. I'm not going to fight it. Part of the power of being able to be a really good trader is to know when to avoid the market. And so yesterday I did that. Today it's kind of that same signal. SPY is the one thing that's kind of giving me a little nervousness. We did break through that 448 hedge pressure right out the door, and resilience is negative. So both of those things show that the open, obviously we gap down, and so the gap and go is likely to hold. The open being resistance and breaking through hedge pressure. Those are kind of two downside targets for today, or two downside indicators for today. So I'm not buying any of the dips below 448. So that's clear as day since we lost hedge pressure. But I'm not necessarily going to short it either, because there is just such a strong DD number as well. One of these things, we put out a video yesterday. I think it's on my feed on the Matt account. Actually, it's on the Rocksuit account as well. Is when I short, and I don't really like to take shorts when that DD ratio is just still so positively bullish. It just means that we're going to have a few red days in the middle of a bull market. So I'm not out there trying to buy, you know, SPY 420 puts or 430 puts to bet on the market collapsing from here. Volatility is still very low, and from there, I don't take that as anything other than we're just having some relaxation sell-off for now. And of course, with the news reports coming out today, as well as Beige Book at I think 1 Central, we're going to have some market moving catalysts that can just shift us any direction. So what I like to do is days like this is do nothing. And if that event comes out and presses us above hedge pressure, I jump in on the long just to trade it. So sitting out now, kind of waiting for things to come out. So 23 minutes, I think, is the first report. And I'm going to sit pretty on that one.
Right on. Appreciate that analysis, Matt. So I just want to run through real quick.
Just do QQQ.
Sure, keep it quiet. What do you got for us? You looking at anything in particular? Any stocks? Again, doesn't have to be like rocket scooter related, but I just want to see, you know, if you got any stocks or any plays that you're catching your eye this morning so far.
On the rocket scooter side, though, I'm definitely interested in looking forward to checking out that new feature that you guys brought into the platform. So I'm really excited about that. But the main thing really
Similar QQQ. Hedge break, irrational, just letting let the market, just let it play around and do its thing. Unless we get resilience going positive, there's really nothing else that we can say about this, right? So negative resilience obviously shows resistance off the box. So if you're below it, resistance off the box. BRSU now, as we're having a hedge pressure break, is also resistance from there. Resistance from there. It's pretty easy setup. If there is, when the news events come out, if there is a hedge pressure break, which I always do with the 3 little dashes as a break, if resilience is positive, then there's a trade to there. Only trade to there. If resilience is positive, only. Okay. So any point today, I always look for those opportunities to long if I can. If resilience goes positive and we're below the band, I trade it to go up through there. If you want to see your cheat sheets, will show that same indication on how to do resilience. Right. So anytime resilience becomes positive, I trade it to fill the gap. So those are trade setups I look for, and so I'm going to keep an eye on both of them. Now they're both very negative today, which means the gap and go is going to be really strong. So the preferred setup today is this resistance type play. So the problem with shorting in the middle of bullish DD and above monthly hedge pressure, so we clearly are above monthly hedge pressure. Below monthly hedge pressure is when the market's like extremely bearish. So I want to see us bouncing off of monthly and this being less than half for me to be very bearish. There are bearish scalps along the way down, so the market's just kind of drifting lower like this over time. But it's going to be choppy, non-directional over the course of weeks. So I don't like to take short scalps in the middle of a bull market above monthly hedge pressure. Those are my 2 things I don't like to see. I want to see DD being bearish. I want to see monthly hedge pressure being bearish, me to be bearish, and I also want to see monthly maps be bearish as well. Oh, my bad. Hold on. Oops. Thanks for letting me know. Let me start over. I'm literally the worst streamer. I'm terrible at being a social media person. My attention span's all over the place. All right, let me try this again. DD being as bullish as it is, greater than half, and us trading above monthly hedge pressure. Monthly hedge pressure is off the charts in here. So for me to be bearish the market, to like bet on directional shorts, I want DD less than half. This is me bear market. DD less than half. Price less than monthly hedge pressure. Monthly map showing bearishness, or actually just selling. Like I want to see those bearish setups and signs. So when we're in a bear short up because we broke through hedge pressure, a bear long up in general is kind of like, it's not a bullish, it's not a bearish setup. Right, we started with the bear long up that broke through hedge pressure, and these things are generally like upward with limitations. So these are like retracement days in a down market, right? We've been seeing those retracements, and breaking hedge pressure. I just sit out. So the only thing I'm waiting to see right now is obviously on the SPY we gap down, and the box is resistance when resilience is less than 0, which it is. Okay, so the box is resistance and also breaking hedge pressure on a bear short up. This also is resistance as well. Any time through here, if res goes greater than 0, I always trade to fill the gap. That's a scalp I always love to take. I always jump in on that with a nice reward to risk setup. Like if it's 20 points, I'll put in 10. If it's 10 points, I'll put in 5 stop. So anytime you're going to watch resilience today, if it goes above 0, there's a scalp opportunity to fill the gap. If resilience stays below 0, we're just destined to, gently trickle down. But to where is the question, because obviously, I would short from hedge pressure to hedge pressure, but monthly is so far down, it's not really a target that's in the foreseeable direction. So or foreseeable future. So I don't like to short against nothing in general. Obviously, the DD band would be that short target, right? If there is any short side, but I don't like to take short scalps in a bull market. That's kind of my motto. And I like to sit out and just wait. It's just trading chop. I definitely not out there buying like SPY 420 puts to bet that the market collapses on this. The volatility is still clean. There's nothing really alarming for me to see today to be nervous about it. I'm an educator and not a streamer. I feel like most of the trading streamers are just like gaming streamers who are terrible at gaming, so they just yell and scream at the microphone about stocks, and they're also terrible at stocks. I've only seen maybe like one YouTube streamer who I actually like, which would be Matt. Like Matt's just a chill, cool guy. Everyone else I watch on YouTube, hold on, literally sounds like a crackhead that knows nothing about stocks, and then people watch it just because it's funny. You say Matt's not chill? I've hung out with Matt in real life. He's chill. Maybe on his stream. I haven't seen his stream lately because I'm streaming, but. All right, let's take a look at this. I see streamers like just doing what they do if they were playing Call of Duty. Not really teaching anything, not really educating anything, just yelling and screaming. All right, I'm back. Sorry about that, Adam. What was your question?
Matt, I want you to tell me where do you think SPY is going to be at 10:15? Real quick, just a number. We're going to talk reasoning in a second. But 10:15, what's SPY's price going to be?
After the report comes out, let's just take 449. I'll take that bet. 449 on the dot. Yeah.
Ashton, what do you got? I'm going to go with 445.65. Okay. Evan.
Yeah, if I'm gonna like spend my time watching something, like whenever I'm driving, I like to listen to podcasts. I like to learn something. So some people get their jollies like watching gaming streamers. I can never do that. If I want to know about video games, or I was gonna play a video game myself, I don't want to watch other people play. I don't want to watch other people trade either, unless I'm learning something, or I like their personality, or I just get like a chill vibe. So if I watch anything, I want to learn something. Here we go. Resilience is back. This is it. That's that trade I was talking about. Resilience positive again. That's great. Let's look for the, but be careful though, because we have the composite PMI just came out. It's a 50.2 and a 50.4 read. I mean, an estimate. So that actually came in slightly as a miss, but still about 50. Services PMI came out. Let's take a look at this one. Who is MK Yojimbo? MK. I don't know who that is. Oh, you're talking to MK here. I think that kind of matches current sentiment. If half the people are bullish and half the people are bearish, even in general, like we're seeing just a liquid, drifting market. So the thing we all agree on is I don't think the bear side is thinking we're going to crash. The bull side thinks we're going to rally too hard. I think we all think it's like tight, choppy market, which I think is what we're going to end up seeing. Oh, the services PMI just came out, and it's still drifting closer to 50. If you guys want to, if you are paying attention to the readouts. You know, anything below 50 is a kind of a deterioration of the 400 private sector service companies that they survey for this. It's transport, communication, financial intermediaries, business and personal services, computing and IT. Just kind of a mixed bag of things, restaurants and hotels. And just looking for, you know, showing growth or deterioration of survey. The survey will prove that in those sectors. And so obviously anything greater than 50 is still decent. It does show that growth, but we are inching closer to 50, and this number has been drifting down probably since July from the 55 levels. So it is showing that retraction in general in these sectors. What's up, Ashton? Wait for the other news event to come out there, because that's going to be the bigger of the movers. Non-manufacturing PMI. So again, not trading until those numbers come out. Does listen to Joe Rogan? I do listen to Joe Rogan. Not like religiously, but some of my favorite podcasts were his. I love hearing people like talk about, like civilization, where we came from, who really built the pyramids, things like that. Like I'm such a huge nut for like learning and studying about human origins, like where we came from. Like I personally believe that, if you go to Antarctica and you go dig through those sheets of ice for a mile, you're going to find skyscrapers from 100,000, 200,000 years ago. Like that ice ages just completely wipe civilization, and then we become nomadic, and then we start over, and then like those with power hide the technology so that when civilization resurfaces, we immediately wake up and, we remember how to build computers and microchips and things like that. They have this advancement technology. I know people always say like Area 51. It's plausible. Like, think about it. Like, Area 51 is housing alien technology. Well, it's probably housing records from civilization from 600,000 years ago, when the polar ice, or when the Earth's poles shift, and where we are now used to be where the North and South Pole was. Right? Things like that. I love to learn like those things. So, all right, let's look at UVXY really quick. We have to think about it, right? I mean, in the last 100 years ago, there were steam engines pushing trains around. Now we have, computers writing movie scripts, and, cars that drive you around, and giant tin cans that fly you across one side of the globe to the next. Imagine what 100 years of evolution does to technology. Now imagine civilizations that lasted for 30, 40, 50,000 years before Ice Age wiped them out. It's very plausible they're very advanced. And that all the secrets in the world are just like the powers fighting over that ancient advanced technology and like leaking it when necessary. Dun dun dun. Dun, dun, dun. Yeah, Graham Chapman. Like I like their stuff. Even though some of it's far fetched, it's fun to think about. As a scientist, personally, it doesn't sound too far fetched. You know what I mean? So you never know. Like I always had this theory that the pyramids were not built as tombs. They weren't built like we think way too much about them. You know what the pyramids are? Gigantic rock structures to survive a giant flood, where people could like go inside of them. They have air vents. Imagine things like that, like, or maybe the house technology, because maybe the ancients knew that, the earth goes through periods of melting and freezing, and then they built giant structures to just go inside and survive. Pyramids, one of the most stable structures that you can build. Survives a natural beating. Lightning round, let's do it. All right, what do y'all want to look at? Amazon. All right. All right, so let me type some things in. Amazon opening up pretty strong as a bull long up right out the door, and Amazon is trading higher. I do like what I see. Let me go ahead and load it up really quick. 135 hedge pressure on Amazon, and the market did open. We gapped down, and Amazon just started trading higher right off of that place. So I think Amazon closes strong and green today on that bull long up. Okay, what do you got next? Hold on 1 second. Let me load up. Hold on, give me 1 second. Technical difficulties. Give me 1 minute. I'll be right back. Hold on. right, guys, send me some tickers in chat. All right. Interrupting you. I'm back. All right, throw them at me. Let's go. All right. Give me 1 second. I think I'm having like... I hear construction around my house. I don't know if the internet's acting funky or not. 1 second. Actually, I am not back. Sorry. Hold on. Wait, I got it. Okay, Coca-Cola, BLU, hedge pressure 58.5. So essentially, when we talk about these BLUs, guys, let me just... Sorry, this is Rocket Scooter shows liquidity map. So what this is going to do is going to give me kind of where pivots are for me to trade off of. So Coca-Cola 58.5, long support, upside play today. Let's go. What's next? Okay, hold on 1 second. Ribbon, not actionable, opening in between open and close with hedge pressure 2175. It's probably going to chop and be sideways. Let's go next. AI. AI, bull short down, resistance hedge pressure 332.5 with resistance 32.5 to close that gap at 3140 for today and call it a day. Baba. Okay, hold on. All right, let's go. All right, Baba, nice strong bull long up supporting at the open, filling the gap close. It is a gap and go. With I don't see any potential upside limit to that. It's a really strong play today, but bull long up right out the door. And if we break through yesterday's close, obviously anytime you fill a gap and go is always a long. Last one. SoFi. Mean reversion long up, oscillating around hedge pressure. Not going to touch this one with a 10-foot pole. Just kind of let it do its thing. ENPH, okay. All right, ENPH is a BSU with the bull zone support. This is a tricky one, but 125 with the tight stop. Tends to be, like, I always bet the bull zones hold and don't flip without a catalyst. But we did reject hedge pressure, so limited upside anyways today. So if there is any kind of play, it's a kind of a wider swing. 125 support to 127.5 resistance, and it's probably going to chop between there. I wouldn't expect us to break 125 and keep going. I think it's going to support there. All right, guys, some for y'all. CF, let's go. All right, CFBLD, upward pressure, support bull zone. I always trade to the redistribution zone, like to fill an open or a close as a resistance there. Okay, BLK. BLU, but not actionable, right? Hedge pressure to the long side. So I would be building a position here if I was going to trade this. But when you're this far away from everything not actionable, anytime you go through the close, you open down, you fill a gap and go. I will always long on a gap and go. Same thing, bullish, but not actionable. AMD doesn't have any actionable pivots right here, other than the gap and go to the downside. Do anything that it wants to do. So normally if there was an event coming up, I would be longing right now to at least have the S&P trade to that 449.25 gap. So that's what resilience does. It allows me to pivot the index because what it is an aggregate of the sum of all the stocks and what they're doing through the redistribution zone. It's an exploit of the MOO and MOC process on the New York Stock Exchange. You ever hear like order imbalances? CNBC's like Apple has a 1 million share order imbalance sell side today. You know, things like that. We take those imbalances and we utilize that process to find those volume buffers in each of the stocks. We look for stocks fluxing through the middle region of their open and close, which we call the redistribution zone. And then, of course, you can see if the S&P is underpriced or overpriced relative to the flux of the stocks. And so the arbitrage opportunities are there very easily. Like if there was a news event, I'd be longing right now because resilience is positive and we're trading to the downside of that box. So it always wants to go fill the gap. But I wouldn't do anything until obviously the news comes out. But it's a very cool tool because we use it to pivot, we use it to pick direction, we use it to scalp. There's all kind of ways you can forecast bad things coming. Like right now, it's forecasting a very large stretch on the market. Right, the stocks are pushing up and the S&P is pushing down. That rubber band is going to contract and it's going to create some volatility when it happens. So when I say Swiss Army knife, there's a bunch of neat little things you can do with it. Let's go. See, I don't do anything until things come out. ISM non-manufacturing 54.5 on a 52. It's a huge beat. Yeah, we have a huge beat on the ISM non-manufacturing numbers. 54 against 52.5. And then the market just goes down. You'll see how it is random. These news events are random. Resilience is back to being negative. Love it. That's why you don't trade into news events. Like the random stuff happens. Claudemir, you asked a question earlier. I didn't see what you said. Oh, good luck on your funded account, by the way. All right, let's go back to some things. All right, so this. Oh, I already have it here. And this is the non-manufacturing PMI. Yeah, this is a rule of thumb for those of you that are new traders as well. The news, the event, right? The service, let me just clear my throat here. Start over. The non-manufacturing PSI, and this is the ISM number, by the way, came in as a huge beat. It's actually one of the best reads we've had since April, and yet the market's trading down. So one of the things that everybody should understand that the efficient market hypothesis is a thing that states that the market always prices in all available information in real time. These events or these news events are always based on old data. That's a great read, right? Yet the market's trading down. You can't ever take what's read on the surface of the news, even FOMC announcements and all this stuff, and say, oh, well, that's bullish, so therefore I'm bullish. There are millions of people who are way ahead of you, inside information, pre-position. They already bet on it. Markets price it in. So it's always good form to not just not trade around these news events, because today is a proving of the randomness of that. Obviously, there's good news in the market. Somebody was waiting for the good news just to liquidate. Maybe they were already waiting to sell and get out of it. There's no way your indicators or anything out there can predict that. So the best form of a trader is just to not trade through those times when there are these big news events coming out. How do you know they're big? You can go to like investing.com and actually ranks them for you. These little 3-star events are always the big movers. And you have a couple of them a week sometimes, and you just kind of avoid the noise and kind of sit out. And then make your decision after all that noise clears out and the volatility goes away, and then see what you want to do. Irrational. Okay, mRNA, BLU, but non-actionable. See, I want to see actionable pivots. So back to the lightning round. Sorry, I got kind of distracted here. BLU, again, not actionable. So like things like this, like I say, I always wait for price to eventually connect with some bull setups and take it. These little drift down red days, they're just days to sit out. You know, save your capital, or I say my capital. I don't care what y'all do, but I say my capital and just wait it out. Let's take a look at NASDAQ. We are in like a float failure situation here. Yeah, the platform's getting cleaner and smoother. So watch for DD float failure today. This is a thing. We're going to want to watch the market hold this. If you just touch this whatsoever, the market gets really crazy from here. So you don't want to touch this line today with positive DD or bullish DD. We're going to watch NASDAQ as the closest one. We're going to hopefully see that it supports and does not touch the line. If it does touch the line, market's going to become even double chaotic on top of a hedge break. So float is something we teach about. Let me see if I have the cheat sheets here. So float is a thing where you have that bullish sentiment in stocks and that bearish sentiment in the index futures. They're pushing and pulling from each other. That bullish hedging in stocks is going to want to lift this away from creating destabilization in futures. There's going to be just this hedging burp. And you're going to see it right now, as a matter of fact. It's going to be live. So let's watch it live. It's going to try to fight to not touch that line. You're going to see a big fight here. You're going to see it right for your very eyes. This is the float. It does not want to touch that line. So if it does touch that line, it's a big deal. You see the fight is really bad right now. Let's open up a tick chart. I'll have to pull on Thinkorswim so you can see it. DD float is such a fun thing to watch. When you see those algorithms kick in and try to fight to hold it, you see how clean and cool that is? You'll see that. Everybody, pay attention. Everybody see that, right? DD ratio greater than half. The indices do not want to go to touch that line whatsoever. It wants to float off of. You see these invisible barriers right here? That's exactly what the screen. Now, if it touches it, then it's bad news. That's why we draw it like this. Everything we do is predictable to a degree. So now if the float failure happens, which is now, it is another irrational set. It's another irrational thing. So the market is 100% random from here going forward. It can do anything now. So don't agree with anything that you see anywhere. The market has now broken structure. It can create massive chaos and volatility. As a matter of fact, the VIX should be trading up on a float failure as well. These are all scripted, predictable behaviors, and now the market can do anything. Don't trust anything. Red candles that come through here, don't trust it. Green candles that come from here, don't trust it. The market's going to whipsaw and be crazy from here. You see how the volatility started going up when you got close to the float? Or got close to the DD band? Everybody see this? You see how VIX just started trading up like the last 5 or 6 minutes? It's exactly what that is. Let me open my layout here. So when basically the smartest thing to do is the day is over. When you got, especially have float failure, there's nothing else to do. It's DD band break. Obviously markets are rational, but also float failure. It's kind of like double problematic. The market could turn around and rally from here for the rest of the day. That's the thing. You don't know. It is random, and whatever you try to do, you're gonna have a really bad time. I promise. Yep. What would you have? Throw a topic at me. So let's take a look at that. So those of you that are not familiar with the commitment traders, let me pull that up on my screen really quick. The commitment traders is a report that the CFTC releases once a week, and what it is based on data from the previous week of positions. Now, you know, the whole thing that Rocket Scooter does, which is different than any other platform out there, is we're using what's called our analysis that we invented. It's called positional risk analysis. So ideally, when you're looking at analyzing the market, right, people look at fundamentals at the start of history. You know, the microeconomic fundamentals set value to something based on the health of the economy or health of the business. Then people invented technical analysis, which was using price action and patterns in price action to try to predict things like oversold, overbought, pivots, you know, resistances, supports, and then charting was invented. So now you're looking at price history to try to forecast future price. Rocket Scooter is a whole separate layer that is different than all those other two things, both those other two things. And what we look at is the actual positional spread. It doesn't matter if markets are bullish or bearish based on, it doesn't matter if markets are good or bad based on bad macro or bad micro. It doesn't matter if you're hitting a support, hitting a resistance. What matters to us is the positions. People are going to be long for whatever reason. They may know something that no one else knows. It could be inside information and they're long. We have that data. We know people's positions. And so you have a heads up when you have positions, and it's a separate layer to price analysis or fundamental analysis. And so positions mean everything. Where people really believe the market's supposed to be and where they want to put money on the table to bet on it. That's how you know nobody's lying or bluffing, because they got money on the table. And so you can get rid of a lot of the noise by just looking straight at positional data. The Commitment of Traders was one of my inspirations to build Rocket Scooter. We pull our positional data from the options landscape and equities. This is an equivalent in futures that's pulling positional data from futures. Now, in equities, the options are reported once a night or once a day at the end of the day to Opera that reveals that information to all of us once a day. Everyone in the world gets that information updated once a day. And so that's great to have a positional snapshot once a day. The Commitment of Traders is a positional snapshot in futures that updates once a week. It's every single reportable entity, hedge funds, or in this case, you have commodity pools, 401ks, and, large banks, small banks, Federal Reserve banks. They're all categorized in the four of these categories: dealers, asset managers, leveraged funds, and the other reportables category. And they report their positions once a week. It's the actual truth of where everybody's positioned. And we look for changes in that to imply and show the reality of why markets are moving. An example, since October of last year, markets have been rallying, and the asset manager category has amassed a longer net long month after month. So as you can see, the real reason markets are going up, people incorrectly categorize that as a short squeeze. However, the Commitment of Traders shows a net accumulation of long position. So it's clearly genuine buying. So you can see that you're not really fooled when looking at positional data, because it tells you who's doing what, and you can make an inference as to why. So now, since the Fitch slap happened, we got kicked around by that. You kind of get this this data point that shows since basically July, we've had a net selling on the asset manager side. So the long only side of the market's been selling, at least in the future side. This is the S&P 500, by the way. So longs are selling. That's not good. And obviously you've seen the hedge fund side, which has been actually squeezing since June, which created that last bump up rally we've had. That's kind of been cycling a little bit. So they are not really shorting or longing much harder than they have been. There's enough people covering shorts as there are getting into new shorts. So new bears are coming in, but there were old bears from the year ready to get out just as fast. So you're kind of having like not really any pressure from that, just a little bit of selling. And so what have we experienced in last month? Kind of just a little bit of selling. It's neat to see that. And the Commitment of Traders is a nice little storybook that can explain what you've seen just by watching the changes in positions. We've also seen the other reportables category, which is, the Federal Reserve banks are in that category, has also been squeezing short since June, which also is showing, there's a lot of people in that category, but also creating a little bit of uplift to the market as well, just a little bit. But in general, right now, it's kind of showing slightly down to not really that bearish. And possible there could be bullishness or a short squeeze if people step in and start buying. So right now, it's a gentle move down without a crash. Markets are liquid enough to ward off a crash. You have long selling and shorts covering similarly at the same time. So it creates liquidity. And so I've made all of this analysis from this report that's updated once a week. And you can see the feel of the market is just gentle. I mean, red candles aren't really crashing more than 10, 20 points per day. And that's what you see when markets are liquid. Now, I use this as a liquidity analysis to kind of understand the state of the market. Now, it is past delayed data, but the trends, hedge funds and money managers don't pivot their positions every other week. I mean, they hold from months, quarters, years at a time. So even though it's a slow moving report, it still kind of shows the history and story of what's going on. And I use it to make inferences about the future. Like if markets are liquid markets don't collapse. They typically bottom out. So right now markets are pretty liquid and we're kind of just floating in the middle of a 3-month range. And that's all from that one report. Yeah, we'll do a Zoom call today. Barb's gonna hang out with the cats again, just chill. Yeah, just kind of a slightly down day with nothing really to say on it. I like to take days like this and sit out and just kind of chill. And remember, DD float failure is random. The market can do anything crazy from here, anything random. So keep your eyes open. Like basically, float failure is an automatic sit out. I don't mess with it. I don't really try to scalp, but there's really not much to guess about, so don't even try. Yeah.
So now we'll just open it up until the end of the space here. As a reminder, again, we're talking mainly through Rocket.
I'm dying. All right. I still got a cold. What happens under the hood when we hit DD? So what happens is futures margin requirements are set by the CME group based on the expected volatility. News events can create volatility. Volatility is like sudden V's in the market, right? So DD-ban is an exploit of something called CME span. Your risk interval is to say that sudden expansions of volatility expand to a certain band. Expected. This is all part of futures. This is mechanically future stuff. And so if the volatility if we're trading something and we start trading it more volatile based on our behavior like this, the CME group will notice this change in volatility and they will change the margin requirements. They actually raise the margin requirements of the instrument. So they'll raise how much it costs to buy that thing. If we're making it more volatile. And so it loops back as a feedback loop. We trade more volatile, they raise the range. If we break the range, they raise the range. If we're trading not so volatile, they'll lower the range. And so they observe us, we act within. If we start breaking this and creating margin calls, you're going to come back a week or two later, you're going to see the margin requirements are going to go up. So the idea that other people know those limits, and obviously they've had structured trades. Futures is part of complex trades, hedging other things. It's like somebody buys something here, short something here, buy something here, short something here, and all circles back around. Futures is part of the bigger hedging equation for market makers. And so when you break through or touch DD band, it's easy to see, despite the catalyst volume, let's ignore this candle, you just see how there's a lot of volume just interacting with here. Like this volume is almost triple when we start off, or we were decayed at before the event. So obviously volume's in decay, and we're still trading at a huge volume spike around here. Because this is a very large buffer, there's a lot of pressure to keep the market in check, especially if stocks themselves are being hedged bullish. Like if everyone stopped trading right now, the DD ratio being greater than 0.92, you will just see that the only pressure, if no one was making manual trades, the only pressure general from hedging in general would be a net long pressure, as there are more stocks market cap wise in the money and call side than versus in the money and put side, which would make this less than 50. So being greater than 92, there's just a general wind pressing the market up, the stock market, and futures are tracking the index, which is tracking the stock market. So why would futures destabilize to the point of margin calls in just the index product when the general look and feel of the stock market is pressing higher? So people understand that, and they buffer this area by preventing abnormal selling pressure, because they know ultimately this is tracking the SPX, which is tracking the stocks, which are gently drifting higher. So you'll see that at those margin limits, you will see that there is just a magical force of algorithmic longing and shorting to preserve stabilization to agree with the DD band. When I say the float failure happens when it just touches the band, it's not a good sign. And actually this is NASDAQ right here. So the S&P is the more important one, but NASDAQ can be an early warning sign of things to come. So the S&P should float if the DD is bullish enough, because you shouldn't have the futures destabilize if the stocks themselves are gently pushing higher. Now it can't happen, and when it does, it just shows the market's in an abnormal selling pressure, and you just avoid it. Do you think we'll have another lockdown? Absolutely not. I was reading things that isn't it like illegal for mask mandates in some states now? A 0% chance, in my opinion, that we'll have any lockdown. I know it's election season, and I know when election season, Twitter and social media gets hot with all kinds of fake profiles and random bots spewing all kind of nonsense to get everyone riled up and steamed up and afraid. Get ready to mail in your ballots this year, everybody, because COVID's back. Right? It's too far removed and not severe enough that I think that there would be a massive backlash if there was a shutdown, especially in a period of potential recession. Right? Great question, though. It's always good to think about that, because it does show that you're understanding the stupidity of humanity. Obviously, COVID became a hot topic during the last election season. I have the blue medal. I've had COVID more times than any of you guys. I've had it 3 times confirmed, probably 4 times unconfirmed. And I'll tell you, each time I got it, it was less and less severe. So if we didn't lock down last year or this year, there's no reason we're going to lock down. If we do, it's a political stunt. You had 3 times, less symptoms each time. And I don't know if people, this is new for a lot of, I know you guys y'all are the smart people that I know. Y'all are like the smartest friends I have. But in general, that's how viruses always are. Viruses don't want to, despite what zombie movies teach us, viruses don't want to create a mutually assured destruction type scenario where if they kill us, then they can't survive and everyone dies. Just like anything else, things mutate to find an ecosystem and find symbiosis in the natural environment. Life always finds a way. A virus has a... Hold on. A virus will always mutate to operate inside its host to be undetectable. And the viruses that have mutated more successfully will find a natural harmony in time. So essentially, when a new virus comes out, it cleans out some of the population, yeah. But as time goes by, it always is less severe, as its mutation path is to preserve the life of its host. Anybody that studies any basic virology class knows that's the history of all viruses. We've never had a virus that's progressively gotten worse over the history of time, at least in the last 60,000 years. Or no, I'm sorry, at least since as far as we know. We never detect. You know why? Because we're still here. And we have higher population now than before, which means there's never been a virus in the history of time that's ever evolved to wipe us out. Ever. Because we're still here. This is the easiest argument to that whole equation. This is the solution to that. Well, if COVID starts killing, it's never going to kill off the entire population. This never happened before. Because we're still here. We've survived it every single time. We've survived every flu, every virus, everything that's ever happened since the beginning of time. Because humans have survived. I'm here today. My ancestors kicked caveman COVID's ass. Whatever it is. So while in the immediateness, sure, it can be severe when new strains come out, but it's always that case. And so as time goes by, this is just not a political question debate. This is a stock market debate. Are we going to shut things down? I'm not going to say it's not impossible, but I think that because of that sentiment and because of a lot of the other propaganda going around about the safety of the vaccines and all that, I think anything related to COVID would be seen as hokey and silly and would discredit. Like if the Dems were to create another shutdown event, people would rip that apart. It wouldn't be as believable this time as it was last time. Like last time, the entire world, you had families like stop talking to each other over their vaccine status. Right now, that sentiment is very, very light. Nobody out there is going to believe that that's an appropriate solution in masses. So the answer is no. I don't think there's going to shut down. And again, I always formulate a strong bet based on things like perception and what people think. And I think if there was a call for a shutdown, clearly the market would sell off. But I would not believe that it would be a long-term thing because the severity of the virus is less and less and less as time goes by. So it would be a short-lived political stunt, and that would be it. It would be a dip to buy. You got COVID at least twice. And I had like alpha strain COVID, whatever the first one was. I had it in 2020 when I told people I had it, I was getting phone calls from my friends like, no way, this is real? You actually have it? I'm like, yeah. They're like, no, I thought it was a hoax. Blah, blah, blah. No, I have it. They're like, oh my God, I'm so sorry. And I wish I would have hung out with you more. I'm like, motherfucker, I'm not going to die. I feel fine. Everyone thought I was going to die. People were calling me like, want to send me flowers and stuff. I was like, it feels bad. I was like, it feels bad, but I don't feel like I'm going to die. I feel like it's I've never had the flu before, and if this feels like what the flu is, it feels like crap. I've also never had a flu shot either, so like I've never got the flu, never had a flu shot. This is my first flu I ever had, and it was pretty bad. But really. back.
Just make sure you follow everyone up here. All these people are a bastion of knowledge and intellect. As I would
Yeah,
like to
DD
say.
float failure
Make
today,
this
so.
space entertaining and helpful. Please make sure you drop everyone a follow as a host up here. All these guys are very smart in their own ways, so I would definitely value their input on your timeline when you're looking to trade. With that being said, thank you all for coming to the space. Again, you want to check out that trial, feel free to DM any of us. We'll hook you up with the link. And enjoy the rest of your day.
Yes, sir. You guys enjoy.
Thanks, everybody.
Or yeah, we're gonna call it. Nothing happening. DD float failures automatic sit out for me. I'm gonna take it easy, let the market just do its thing, and not really waste my time. 2 days in a row sitting out, doing nothing. That's okay. I mean, exactly how you exactly how you should see the market. Not every day is a trading day, and I like things to line up. I like to maintain a really high win rate, so I don't always throw money at the market. One of the tricks of being a very good trader over the long haul, surviving, is the trick. You want to make sure you survive. If you think every day is a trading day, you're not going to survive. Not every day is a hunt. You're out there hunting. You're not going to find something every day. Maybe sometimes you have to be patient. You have to look for something and strike when everything lines up in the way you want to see it. Find what you're good at, get good at doing it, and don't just overtrade and gamble. Like Rock Scooter's designed to give me tools to keep me from overtrading. So 2 irrational days in a row, market slightly drifted lower. I haven't taken any losses. And from the minute the market opens, I see that and I don't do anything. And there's power to that, the power to being picky and choosy. Hit hard when you're confident, don't hit it all when you're not. And these are cool tricks that we like to teach, and we're glad you guys came to the show. Now, obviously, we'll have a Zoom call in about an hour and a half, and we'll see y'all there. All the Pro Plus members. If you don't have Pro Plus, send me a message. I'll show you how to get it.